few things more frustrating than finding your dream home only to discover that you can't get a mortgage to buy it. And it's not always about you. Often it's something to do with the location of the property that you're buying. So which areas are the banks wary of lending to? Marissa, Director of Rise High Financial Solutions, joins us now for more. Marissa, good morning to you. It's a bit tough when you can be discriminated against just because of the suburb you're living in, and people may not even be aware of that.
Absolutely, and good morning, and thank you for having me. Yeah, I guess you know, the banks take three different things into considerations when they're determining whether they will lend an applicant money, and one of those things is the applicant's ability to service the loan. Another of those things is the applicant's credit history and their credit score, but the third thing is the type of security. So that can be dependent on what type of property they want to buy and where that property is located.
How often are these restrictions reviewed, and is it just sort of a recent thing as in the back of the you know, the Royal Commission into lending?
Yeah, look, these restrictions I think have been around for a while, and they are reviewed quite regularly. I guess the banks have the ability to create their credit policy and their restrictions to manage their risk, and they have the choice to review those locations and those restrictions as frequently as they like. So we are seeing that there is frequent movement in where they are making restrictions and you know, what postcodes they're updating on a regular basis.
So which situations are going to be the most restrictive for banks, where they're going to look the most harshly on lending?
Yeah, so I guess there's probably three main areas that I could say if I could generalise, there's three main areas where we may see some restrictions. And when I say restrictions, it may mean that the bank may be willing to lend a lower percentage of the value of the property. So generally these areas are high risk areas, so it might be where the bank perceives that it's a high risk as far as the property values are concerned, and generally we see these in, you know, regional, remote, mining towns, or towns with very small townships, very small populations that are really supported by maybe one or two industries. So there is a bit of a risk there that the banks perceive. So they may be willing to only lend a lower percentage of the value in those areas. There may also be areas where the bank perceives that there might be an oversupply of property. You know, for example, we are seeing some restrictions in capital city, high density apartment type style purchases. You know, that's an area that perhaps banks perceive potentially an oversupply. And then there's also examples where a specific bank might feel that they're overexposed in a particular area. It might be a particular suburb where they feel like they're overexposed and they hold, you know, too great a percentage of properties in that area, that they want to sort of cut back in that area. So that's sort of a very bank specific thing. But generally I guess the oversupply of you know, inner city apartments and the mining and regional towns, they're sort of more across the board.
So if we look at some of these suburbs, we might look at some of them by postcode and work through maybe each state and see how we go. If we start off with New South Wales, where are we looking at?
Yeah, so once again, you know, there is many of the banks are having loan to value restrictions, which basically means they're lending a lower percentage against properties, against high density apartments or units that are in blocks that have more than 10 apartments or units. So you're looking at in the city you're looking at in the central city, so the CBD. You know, if you're trying to buy an apartment in Sydney, in the city, like it is in most of the capital cities around Australia, you may only be able to borrow 80% or potentially 70% of the value of that property, as opposed to being able to borrow 90 to 95% of another property in another area. So most of the capital cities have these high density loan to value restrictions when it comes to high density apartment blocks.
We're looking at now just the figures, we just had them up on the screen there, and it was really those central CBD, 3,000 for Victoria, 4,000 for Queensland, 5,000 for South Australia, obviously. So it is really the central area that you're looking at as a prime position, which I presume is definitely high-rise for apartments.
Yeah, absolutely. You know, the restrictions tend to come into play when we're looking at a block that has more than 10 apartments or units in it. So definitely it is the city centres across Australia. So I guess if people are looking to buy in those areas and buying an apartment, then they really need to make sure that they have spoken to a mortgage broker first, and that they can actually borrow what they want to borrow in order to buy that purchase.
Okay, so you've got suburbs in Group A and Group B. Can you describe how they fall into either of those categories?
Yeah, so generally the banks and the mortgage insurers will group and categorise postcodes depending on their risk profile. So, postcodes and suburbs that are categorised by the bank and the mortgage insurance as Group A, generally, all the banks are happy to lend to those at their maximum loan-to-value ratios according to their normal risk policy. As we get to Group B and Group C, there's more perceived risk around those postcodes and areas. So it may be that we have fewer banks willing to lend against those properties, and the banks that are willing to lend against those properties may have reduced loan-to-value ratios, which means instead of going to their normal 90 to 95% loan-to-value ratio, they may only lend 70 to 80% depending on the actual property and the postcode. So it doesn't mean that you can't borrow money to buy these properties. It just means that you're going to have less choice of lenders, and potentially you're going to have to contribute a higher deposit.
Now, it's interesting in that Group A where you can borrow the maximum loan-to-value ratio off of the banks. Looking at all the postcodes, there are none in New South Wales and Victoria in those columns. So it's just that those two states are being much more critically looked at by the banks?
Look, I mean, like I said, these things are always changing. So it's probably, I guess the New South Wales and Victorian market have experienced some heat, I guess, over
yes.
Last few months, and potentially that's reflected in the postcodes. But I guess I would encourage viewers not to get too caught up on the postcodes, as of today, because it's really a moving, it really changes and evolves as time goes on. So I think the main thing is just to make sure that if you're looking to buy a property, that you are being proactive and you've got an idea of where you want to buy and how much you need to borrow, and you're actually making sure that you can do that before you make the offer.
Marissa Schultz, thanks so much for joining us today, and for people who want to know more, they can check in with Rise High Financial Solutions.
Thank you so much for having me.
In today's Slow